Hi, I'm Frank Ryan, the state representative from the 101st District in Pennsylvania. In the wee hours of the morning, late in 2017, the Pennsylvania legislature approved and the governor signed a new law, which, as part of the tax code, required the withholding of Pennsylvania withholding tax on 1099 miscellaneous income for those individuals working in the Commonwealth who live out of state. Now, if you're not familiar with that tax code, and I wouldn't expect most people to be, what it basically means is if you reside in another state and work in Pennsylvania, you have to pay Pennsylvania withholding tax unless you're an employee. But little known to most people is that very innocuous change to some was a catastrophic change in the laws to others. And the reason is that we have reciprocity agreements with some other states. Let me explain what a reciprocity agreement is. Let's say you happen to live in Pennsylvania but work in Maryland. Your Pennsylvania employment status is such that by you being a resident of Pennsylvania, your Maryland employer will withhold from your taxes Pennsylvania withholding taxes, even though you work in Maryland. So as a result, you would pay the taxes to Pennsylvania. That's called a reciprocity agreement. We have this with a number of other states: Maryland, Ohio, West Virginia, Virginia, Delaware, and New Jersey. When we implemented this 1099 miscellaneous type income approach, it means if you are living in Maryland, in this particular case, I'm going to reverse the scenarios. You're living in Maryland, but now you're doing work in Pennsylvania. What will happen is that Pennsylvania company will have to withhold Pennsylvania withholding taxes from that Maryland resident. Well, here's what's going to happen as a result of that. Most states have viewed miscellaneous income, because of the advent of independent contractors, as the same as pay and wages. We've inadvertently opened up a door to where those states will retaliate against us and have them do that to our state residents. So if you are a Pennsylvania resident as an independent contractor doing work in Maryland, then you will then find yourself having Maryland withholding tax. The net result of all of this is that it will create a phenomenal amount of paperwork with little to no tax benefit. You see, what the intent of the law was that we would want to find some way of taxing those individuals who are working from non-states, non-type of reciprocity states with us, that we would then withhold Pennsylvania withholding tax, and they thought the estimate would be about $30 million. I contend that instead what they've done is they've opened up a floodgate. And here's the floodgate. There's a number of things wrong with it. First of all, just because you give someone that type of a 1099 miscellaneous doesn't mean that they earn the income in that state. So let me give you a real life example for South Central Pennsylvania. Say if you are an independent contractor doing work for Hershey Corporation. Hershey, Pennsylvania will issue you your 1099 miscellaneous, but that work may or may not have been done in Pennsylvania. Now, there is a provision in the law to allow someone to exclude that non-Pennsylvania sourced income, but that is an unbelievable administrative burden. So my bill, House Bill 2027, is designed to repeal this. And what we intend to do by repealing it is say, let's go back and look at the reciprocity agreements that we have with other states. Let's capture that income, but let's do it in an orderly, rational perspective, rather than in some midnight approach where it hasn't been through a committee, hasn't been properly vetted, and hasn't gotten input from professionals. I had an interesting case the other day. A CPA sent me an email, and he sent me a scathing email, and he said, Frank, I can't believe you would sponsor a bill this idiotic. And he used those words. He said it was irresponsible. And he said, I just want to tell you that it was so horrible it would have a tremendously negative effect. And he CC'd an awful lot of people in the email, and I sent him a response. I said, dear sir, thank you for the email, but you misread my bill. My bill repeals the very thing you're arguing against. You misread it. And the very first line of my bill says I'm repealing this provision. So he came back and he sent me another email and he said, I'm embarrassed. I hadn't really read it yet. And now that I've read it, I see you are doing exactly what I need you to do, and I want to get behind you in getting this bill approved, House Bill 2027. Ladies and gentlemen, if we intend to have any type of orderly economic relationships with the rest of the nation and the rest of the world, we have to think through clearly the impact of bills that we pass. We need to make sure they're properly vetted. So I'm going to ask you to take a look at House Bill 2027, and let's get behind this program of repealing this short-sighted version of attempting to get more tax revenue. You know, a better approach for us to do would be looking at ways of cutting costs rather than increasing the regulatory and administrative burden on small employers, large employers, and every taxpayer in the Commonwealth. Thank you so much for your time. I'm Frank Ryan. I look forward to hearing from you.